Right when the market looked like it was about to bounce back from yesterday's dip, it started to sell off. Let's go ahead and dive into it. We're gonna talk about 4 specific stocks that I'm buying right now, and one of them I'm giving a big update, which is HIMS. HIMS saw an amazing day today, and we're gonna talk about exactly why the stock went up and why I think it's going much higher from here. So let's go ahead and dive into it. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. Now, let's take a look at the account. As you can see, this is my account right here. If you haven't subscribed yet and you do want to see me and follow along my journey to my 8-figure goal, be sure to be subscribed by clicking the button down below. Also, if you get any value out of this video, I would highly appreciate if you gave it a thumbs up. I appreciate you being here. So let's go ahead and dive into it. I'm not the only one making profits during this time. As you can see here in my private mastermind, Options Trading University, we now have 341 high-level clients in this group, and they are all sharing their inspiration. As you can see, John right here sharing his August results, which is great. 4.1% ROI. Obviously, results vary based off of capital and risk tolerance, but that was great to see some inspiration there. Gareth here sharing his inspiration, and Jefferson sharing his August inspiration as well. If you do want access to my trades in the Ryan's Trade sections and the leaps, entries, and exits, that'll be at the top of the description down below. Also, I do give away free trade ideas on my Instagram and my free newsletter, so be sure to be subscribed to both of those, which are both down below in the description. So let's go ahead and jump into it. QQQ bounced back today. We saw a high of 571 and then quickly kind of sold off, gave up that steam. And the VIX, you know, while it did spike yesterday all the way up to 1940, we're now trading at 1695. So there's still slight fear in the market. I look at the fear and volatility index, which helps me allocate my cash efficiently and make sure that I have cash in the case of a crash or a VIX spike when most people are 100% invested. I make sure that me and my clients and you guys have cash on the sidelines. So let's go ahead and jump into the VIX levels. As you can see, we are trading on the lower end of VIX 15 to 20. Essentially, I could have 60 to 80% of cash allocated or 20 to 40% of cash just sitting on the sidelines. Today, I have 17.3% to be exact. The reason I did that is because I started to allocate to some stocks that are looking really beat up today, okay? QQQ, I think we're just gonna be kind of trading in this range until Friday jobs reports come out, okay? And again, you know the downside risk that I talked about in the last video. If we get a bad jobs report, you could expect to see this 545 area, okay, for a nice buy the dip situation. If we get a, you know, kind of in line with estimate jobs report, the rate cut is for sure gonna happen no matter what, but I think the market will react better to that, maybe, you know, grind up higher like we have been doing in the past, okay? So that's kind of where I'm seeing the market, but I'm preparing for this situation because, you know, the market could surprise us and we could see this dip situation happen. I'm just making sure that I'm prepared. I'm obviously exposed long side. I'm long the market. I believe the market's going higher from here, but we always got to be prepared with cash when these things happen. So that's why I have about 17%. And if this happens, I'm going all in, going to be allocating that, probably getting that cash level down to 5% again, just like we did before the Jerome Powell speech at the Jackson Hole Summit, okay? So let's go ahead and dive into this specific stocks. Now, the first one I want to look at is actually Amazon. All right, Amazon is providing some good opportunity here for, you know, a buy the dip situation. I like Amazon at 225. It's currently at 224. So I think that Amazon could recover all the way up to previous all-time highs of 242 before the tariffs crash. And I think this is one of the most beat up blue chip stocks in the market right now. So let's go ahead and dive into the portfolio and I'll show you exactly what I'm doing. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. But if you take a look at the portfolio, okay, I do have an Amazon position. Currently 67,500 in cash secured puts. Nothing super aggressive. I don't have a 6-figure position, but I still do have a position on, and probably towards Friday, depending on that dip, if we do get that dip, Amazon could probably head down a little bit further. So, you know, maybe to the 220 area. I still like the 225 price point. So what I'm doing is I'm going to September 26th and I'm going after that 225 put. Yes, It's something that I don't do very often, which is sell in the money puts. But because I like that price point and I'm getting, a 2.5% ROI, results are not guaranteed based off of, the stock price. But I do like that price, and I do like the ROI that I'm getting paid there in 23 days. Okay, so that is kind of the one that I'm going to be getting. Obviously, if we go down to 220, I'll probably just do the 220s, okay? Because the ROI will be very similar, but that is how I'm playing Amazon. I'm not just buying the shares. I sell cash secured puts so that if by expiration in 23 days, the stock finishes below 225 or 220, I'll be forced to buy 100 shares. But I got paid to dollar cost average. So I like collecting premiums for buying stock. So that's how I personally do it and how I run the wheel strategy, okay? So that is my Amazon position. Yeah, I really do want to size this position up a little bit more, but waiting for, a potential continuation of this flush, maybe down to the 220 area, as there is a little bit of support. Yeah, there is support down at the area. So if we do get that, great. That would be an opportune moment, okay? Now, the next stock is Robinhood. This stock is showing a lot of bearish momentum, okay? Bearish momentum on the MACD. RSI is approaching that oversold area. We haven't seen this very often. The last time we saw this near oversold RSI was all the way back during the tariffs crash, okay? So this is a very, very, very good opportunity right now to sell aggressive cash secured puts to acquire the stock or just collect premium, and that's what I'm doing. So I do expect us to go much higher, basically probably to the 130s, maybe even the 140s by end of year. But for right now, right, it is trading at the lower Bollinger Band. Now, what that tells us is there's a 95% chance that it's going to stick within these Bollinger Bands, but there's a 5% chance it might break below. And if that chance happens, okay, on Friday, again, I will be more aggressive, but I did actually put on a trade today in Robinhood. I couldn't resist because it looked very good. So let me show you exactly what I did. We're going to go to the account, and Robinhood is currently one of the largest positions in the portfolio, 175K in cash secured puts. I have the 105s, which I'm totally fine owning Hood at 105 if it finishes, below that in 9 days. That's totally fine with me. I'm getting paid to do it, as you can see right here, 2K and 1700. I have the 95s. I love that price. But today I sold two 100 puts. So I went right at the money and I collected $1,000. Now, obviously results vary. September 26th, and it went right to the 100s, which are paying out 6.3% ROI in 23 days. Results aren't guaranteed. These numbers fluctuate, but I really like that strike and return, that nice 100 even level. The market likes even numbers, and usually stocks, like I remember when Facebook, or back when Meta was Facebook went from 75 straight to 100. And I remember that, and it never looked back. It kind of hit that 100 level, and yes, it sure traded around there for a little bit, but now the stock's at 740. So I think this is a similar situation with Robinhood. We'll look back in a couple years and be like, wow, I wish I would have bought Robinhood at 100. And, for me, the best way to do it is sell a cash secured put and then potentially get assigned. I might not get assigned in 23 days because we could see Robinhood at 115 in 23 days, right? So, but that's how I'm playing it. I like the stock, and, currently selling as many cash secured puts as I possibly can without going over 15% of the portfolio. The next stock is Palantir, another beat up stock, okay, that's holding really well during this mini pullback that we're seeing in the markets, okay? So far, if we look at from the all-time highs, all right, this stock is down about almost 20%, okay? So these opportunities are very rare on Palantir. The last time we saw that was during the tariff crash. And, these are the opportunities where I say, hey, do I like the stock still? Is the fundamentals the same? They're still acquiring more customers. They still have recurring revenue. Their net free cash flow is larger than ever. Yes, the PE ratio is a little high, but it's not as high as it was just a few weeks ago when it was trading in the mid 600s. Now it's at 513. This is a wonderful opportunity. So I'm selling more cash secured puts here. I'm prepared to add more on Friday If the jobs report comes in very bad and the market tanks, I'm prepared to add more here. But I already have quite a sizable position. If you go to the positions, okay, I have 130K in cash secured puts and 30 grand in Leap's call options, which are currently down 12%, but these fluctuate. Like I'm prepared for this to be down 50%, and I'm holding it long term. I have 499 days left. This expires in 2027, so I'm not worried about it. But I do have a sell order on it at 10% profit. I'm fine taking that quick, but I might actually delete this order and hold it for longer for maybe a potential bigger gain. But I'm waiting, to see what the market does here. But what I like, I have the 150s, I have the 167.5s that might get assigned in 9 days. Cool, I'm fine owning the stock at that price. There's plenty of covered call premium to collect. But if I had to enter a new position today, I'd probably just go out to October, 30 days, and I would go to, I would be pretty aggressive. I'd probably go to the 150s because I already have those, all right? And it's already at the lower Bollinger Band. If we look at Palantir, 150 is kind of midway, a little bit above this lower Bollinger Band here. So if you wanted to be safer, right, I would go, potentially to the 35 delta. I go 148, collect 4.23% ROI. Results aren't guaranteed. These numbers fluctuate, but I like the 148. I'd probably sell this one and collect 590, okay? 30 days to be right. If the stock goes below 148, I'll have to buy 100 shares, okay? So I really like that trade. Now let's talk about HIMS, okay? HIMS saw a 4% gap up today. It's up 7% in 1 day, okay? Back up to these levels. I think that, we're probably going higher from here once this market kind of turns around, especially for it being one of the only green stocks on the day in the portfolio. A lot of our stocks are down, but HIMS is actually up, okay? So this is a stock that, is very volatile. It'll go straight up and then it'll gap down and it'll go straight up again, previous all-time highs, and then it'll gap down. So that's kind of the cyclicality that I expect in this stock, but these are prices at the lower Bollinger Band. The news is looking good. If you take a look at this article, it came out yesterday. Basically, a judge dismissed a lawsuit between Eli Lilly and Willow Health, okay? And basically the lawsuit was similar to all of the ones that Lilly and Novo are doing against these smaller companies, basically saying, hey, these compounded versions of our GLP-1s or semaglutide is illegal, shouldn't be allowed, blah, 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 right? The FDA allows it if it's personalized dosages and personalized towards the patients, right? Because it's all about the patients. The patients should decide if I don't want to do this GLP-1 because this other compounded version has less side effects or fits my needs better, then the patient should decide what they should get, right? And basically the judge dismissed the case from Lilly filed against Willow Health, siding with the telehealth company argument that its versions of the GLP-1s are in fact personalized, which in the same argument HIMS has made when Novo has publicly accused it of illegal behavior. So this was a huge win, and it's looking like these telehealth companies, especially the smaller ones that got sued, are getting out of these lawsuits, and that only benefits HIMS and Hers Health more. So I do see us going back above 46 in the near future. Okay, we're already at 44, and I do think we're going to be trading in this 46 to 52 range in the next week or week and a half, and we might even get above that 52 range in the next few weeks. Okay, so that's kind of my expectation there. Once this momentum builds, we just had a bullish crossover today on the RSI, and the MACD is setting up for a bullish crossover there. So these are also things we really want to see. PE ratio is 55. I mean, this is a great company, growth company, has a lot of premium. So let's go to the portfolio and I'll show you what I have. So we have currently 1,800 shares of HIMS. I'm selling covered calls at $1 above my cost basis. My cost basis is $50. I'm selling the 51s to collect 1 or 2% or 1% in 9 days and 16 days, and then also 2% in appreciation. So that'll give me 3% if the stock does go past 51. Okay, so I really like that. I love HIMS, and these, you know, if hopefully they expire worthless, so I could just keep the shares and keep, you know, increasing the covered calls to higher prices. But if they get called away, that's totally fine. So what I would do today on HIMS, like I already have the 40 puts. That was a great trade, but I would probably go out to October 3rd and I would go to the, you know, 30 delta. All right. So the 41 strike, super safe, collecting 4.9, almost 5% ROI. Results aren't guaranteed. Those numbers fluctuate based off where the stock's at. But that seems like a good trade to me. I like that strike, and I'm willing to buy it at 41. So if I had to put on more positions here, that's the one I would go for. And you know, those seem like a good play in the future. So if you enjoyed this video, please give it a thumbs up, and I'll see you in the next update on Friday. Take care. Have a good one. Stay blessed.